Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. A couple of rating changes today. Caesars Entertainment, um, also natural gas going to a neutral rating, and also the iShares Commodity Index, GSG, which is 70% energy. So, but also a couple of interesting things that look poised to have a big move, but not tonight. So I'm not initiating, but I'm going to cover them so you know, and that's mainly gold and silver. So let's get into it. Um, so tomorrow, of course, is Friday, and on Saturday I will be driving from Southern California to Chicago, which will take me probably until Tuesday night. While I'll have some access to a computer, I probably won't be posting or unless there's something really relevant. Um, so I'm going to cover a few things here. Number one, the S&P 500. But why is this in my way? I don't know if you can see that or not. Okay, so the S&P 500. What was it? A week ago on the call, I suggested that the market was poised to go down. This is big picture stuff going back a few years, and here's your bullish channel. You want to buy at support, you want to sell at resistance. Then we had a throw over top here, and then we started to go down. And then today, um, our fearless president came out with some bullshit comment to prop up the market. Um, and so we had a recovery today, which the market didn't look too good before that. But anyway, when I look at this big picture, I'm still a seller up here, and I'd be a buyer down at lower levels. We got a negative divergence, and so all that's set up. Now we're just going to take a look at this small amount here. And so here's where on the call, I didn't make a call. I didn't go officially bearish on the market. I was just saying I wouldn't be surprised to see the market go down. And this was the day that that happened as we had a confluence of moving averages coming together and prices came back up to meet uh, that divergence. That's a type 2 convergence, and it promises a new lower low, which we got. And what I found interesting in this is, according to the Elliott wave theory, trends or cycles go in waves of major trends go in, not major trends, but the the main direction of a trend is seen in 5 wave patterns, and we had that. So this is telling me that the direction is now down until something changes my mind. But here we have one, two, three, four, five. We had a 5 wave decline. And what happens? A motive wave, which is in the direction of the bigger trend, which in this case is down now. You get an A, B, C correction. So I think that's what we're getting. And I wouldn't be surprised to see another up day, but we're getting close to a spot where we should turn down again. So as we hit these lower lows here, you can see this is an intraday chart. This is a very short-term chart. It's a 2-hour chart. Each one of these bars represents 2 hours. So it's like 2 months long. And as we hit this lower low, you can see we got a higher low. So, if you were shorting, you'd be covering some of those shorts and possibly buying something. But anyway, we also have potentially a head and shoulders top with the left shoulder, the head, the right shoulder. I'd like to see a bigger right shoulder, but it's legitimate. And we're testing that now. So um, if this turns out to be we'd have to break the right shoulder, the top of this right shoulder to negate this pattern. If we don't, if you measure from the top of the head to the neckline and project down, you come up with your price projection, which is 7,050, something like that. So, it's not a huge pattern. It's not like, but small patterns can dwarf into bigger patterns and et cetera. So that's the S&P 500. Thought you might find that interesting. That's not an official buy recommendation or short recommendation. It's just for your information. So here's Caesars Entertainment, and I did not even know that they have entered into a merger or a buyout from a company a week ago. And that's why we're seeing all these really small updates. On the close, you'd get $31 for the share price if the deal goes through and the terms are the same. These things can change. And those of you that follow me, it has too much hair on it. I just want to get out and look for something different. It's too bad because this is a really nice bullish inverse head and shoulders pattern. And it doesn't mean that the deal could fall apart and then people would see Caesars as worth a lot more money to Caesar shareholders, and you could see this thing really go. But it could go months and months. So I'm going to just step away from this. We had a 6% gain, and I'm good with that. And with the market the way it is, I'm okay. Union Pacific, the other common stock that I currently have, I can't believe I only have two actually. And this is still in a buy rating, so nothing's changed. This is a huge consolidation, symmetrical triangle going 1, 2, 3.5 years. If you measure the base of that and project the distance upward, you come up with 335. We got as high as 280. Right now we're at let's call it 270. So there's still good upside here. It held our stop like a champ so far. And, we got a gain locked in here, most likely. So my stop is 260. If it breaks that while I'm gone, you want to get out. Excuse me. Okay, natural gas symbol. This is the ETF, UNG. And here's another one. The trend, after being in a downtrend for several years, we had an ending diagonal pattern here, two converging trend lines. Those are found at the end of major market moves. In this case, that was in a downtrend. And now we've had a five-wave advance. Okay, so we're getting a correction. This could be it. What I don't like about this correction is that it broke below our confluence of moving averages. And so and natural gas is super, super volatile. And because I'm not going to be around, I'm going to go to a neutral rating on this. Um, and that's really what I got to say on it. I do expect it to go higher, but I think it could correct a little bit more here before that happens. And right now we're break even. So I think it's a good spot to get out of this. But I'm expecting big, big, big things in natural gas eventually. And how volatile this is, the rest of the correction could be one day, it could be down 10%. And maybe that would be it, but we just don't know. So, given the situation, I think for anybody that's following this because of me, I need to go to a neutral or sell rating. This is a seasonality. It's interesting. I should have paid closer attention to seasonality. I always look at it, but really commodities in general have a soft June, and natural gas is no exception. And it's saying it could bottom around mid-July. So, it doesn't mean that's going to happen, but it does mean that there's a tendency. So it's just one other little thing against natural gas over the near term. This is the iShares Commodity Index, symbol GSG. This has been a huge winner for us. Here was the first time we bought it. This was a big 3-year consolidation or 2-year consolidation. And we went neutral, and then we bought it again on a dip, and then we went neutral, and then I bought it this time. Boom. And so we lost, I'm going neutral at 727. So just for the record, I haven't sold on mine. I've sold, the stop is a stop. It definitely broke the stop. Um, the only bullish thing on this chart, which is I mean, short-term bullish, meaning that I don't like selling when things are down. I like selling when things are up. But we have a confluence of moving averages right here coming together. They're touching right now. And so we could get a retracement back to that confluence of moving averages, which would be like 32.25 or something like that, which I don't know what that is, like 6 or 7%. And that would have been the ideal place to go neutral. If it can't break through, then if that happens and it can't break through, then it promises a new lower low. If it breaks through, you're off to the races. Um, I'm going to follow my stop. I'm going to go neutral. I sold probably 80% of mine. Um, and if we get a tick up here and it looks like it's not going to get through, I'll sell the rest. If it goes lower, I'm okay with a smaller amount. It's not going to affect, my portfolio that much. And you never know. Like we could bomb Iran tonight, and oil could be up, $20 a barrel tomorrow, and this thing would skyrocket through because this is 70. This iShares Commodity Index is 70% energy, so it's very energy heavy. So I'm going to show you oil. This is not a recommendation. This is just like I did for the S&P 500. You might find this interesting anyway. Everybody's talking about it. Here was a big bullish falling wedge here that we had, and here's where I went bullish. Pretty good timing there, and then went neutral up here. And I said I wouldn't be surprised to see a triangle, some consolidation here, and that's really what's been going on here, as far as I see. Now it could break down $10 a barrel tomorrow, and this triangle's not there. But when I look at it right now, you know, um, it looks like it's still intact to me. It looks like it needs a little more work, though, actually. And this blue arrow, the buy arrow here, was just when I went bullish on the iShares Commodity Index, GSG. So it's just kind of give me a reference point. But I think there's another high coming. Again, Elliott wave theory believes that trends go in waves of five. One, two, three, four, triangle. Triangles are normally fourth waves, and then we get another explosion to the upside. You can see on this high here, when I went neutral and on GSG, for instance, we have no negative divergence up here. We got confirmation that there was a lot of underlying buying on this high. So normally you get another higher high, which would be our fifth wave, and then we get a lower high on our relative strength index telling us that the underlying internals were weakening, and that's when you'd want to get out and maybe start to look to short oil. And this is just looking at that triangle. It looks very clear there. It doesn't mean it can't break down. It can certainly break down. But to me, it looks like there's a consolidation going. One of what the futures are doing right now. Um, yeah, I'm selling. I'm going to neutral on GSG, bringing my holdings really down to a minimum amount, and we'll see what happens on that. Okay, so we're going to look at silver and platinum, the two that we went neutral on. We took a loss. What was the loss? 10%. Ugh. On silver. We're right at the same level right now. And again, I still think there's a higher high coming. We don't have a negative divergence up here. I believe these were all my buys and sells through the last few years. I missed a lot of this here. But this was the top of wave three. And this is a bullish wedge correction, wave four. And we broke out of it. And now we're kind of going down the back side of that. It'll be interesting tomorrow. I still think we got another week or so of some weakness. But tomorrow, if it holds at this level, we got a nice bullish hammer here. You can see the body here. This is a weekly chart. Each one of these candlesticks represents a week of price action. So the prices would have opened at the top, intra-week sold down, and towards the end of the week, if it can remain up here at this level, you got a nice bullish hammer there on a weekly chart. Those are usually somewhat reliable. I'm seeing if I can see any others. Here's one. Not as good as this one looks right now. Um, so anyway, I will be revisiting that next week. Um, and that's where we're at. I see that's up quite a bit today, tonight. We'll see if that holds. That doesn't mean anything by tomorrow. So that's silver. Now, here's seasonality again. Seasonality is saying we go down into a low the end of June. Well, sometimes people front run this stuff. I'm not the only one looking at seasonality, and other people, again, I wouldn't base my whole buy recommendation, or I wouldn't be buying it just based on seasonality, but it definitely is something to be cognizant of. And you can see then we go into the sweet spot of this through the end of the year with some weakness, of course, and but some chop. But that's pretty bullish seasonality that we're coming into pretty soon. The gold looks exactly the same. So let's take a quick look at platinum. Platinum, same, exact same thing. Third wave, low off top. We did have a little negative divergence, and then we got a bullish wedge here. And then bought here. We had a good start to it, and then we got stopped out. And we're lower now, and we're also trying to form a bullish hammer here. Excuse me. The seasonality here looks a little bit different. Well, it's not as bullish, like silver and gold from June, from the end of June, their seasonality kind of goes straight up to the right. This still kind of chops downwards. So if I was going to be buying things, metals, I would still consider this just because of seasonality. Again, it doesn't mean anything, but silver looks really good and gold looks good too. Oh, natural gas seasonality. Did I show this already? I'm sorry if I did, but here we got some chop going. We got a low coming in first couple weeks of July. The retest of that low. So there's some chop here, and then that thing takes off too. So another reason to be neutral on natural gas. Well, I hope you found that informative. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends, neighbors, and family. Have a great evening. Adios.